Hello future millionaires and welcome back. In today's video, I'm going to be going over my 2026 stock portfolio as well as showing you the system that I use to construct it, which will include a walkthrough of certain AI tools, and I'll also show you how I integrated them within my research. However, before getting to all of that, I want to give you all the list of criteria that I use when constructing this portfolio. And this mainly boils down to three things. Number one being my understanding of the business, as I find this to be, very essential as you need to know what you're investing in. And the reason why is because this information will provide you with either confidence to keep investing, or with red flags that will tell you don't invest here or exit your positions. And when I say understand, I don't mean understanding as in, oh, I understand what this business sells, but rather understanding more complex things such as the business structure or the various business segments. For example, Microsoft, which I'll explain later, has one business segment, which is productivity and business processes. This segment has softwares like Excel, Word, and stuff that you've already came across. And it provides reoccurring sales due to the fact that it's subscription based. And this is important to know because each segment is going to contribute something to the business, which is what we need to know as a long-term investor, because like I said, it will either give you confidence or red flags. Now, the second thing that I look into, or the second criteria that I use, was selecting companies with high competitive advantages. The reason why is because this will cause a long-term resilience, which is what I personally look for as a long-term investor. Last but not least, I also looked into the valuation of these companies, and valuation is a concept that I find to be highly misunderstood because people cannot distinguish between cheap trash and discounted quality. And it's not to say that these companies are discounted quality for everyone, because everyone's gonna have a different set of criteria. So valuation is something that I will explain later. And before we, get started, I just want to let you know this is not financial advice and that I am not a financial advisor. I am just a teenager sitting at his desk. Now, the reason why I told you the set of criteria that I use when constructing this portfolio is because it leads me to the first part of this video, which is creating your investment philosophy or your investment strategy. And this is where I suggest you go to Google Drive and create a new folder, which is just finance related. I personally name my investments, and this is how I organize mine. I suggest that you also follow a similar order. And within your investment framework, or the one that, my investment framework folder, I created a new document, which is called investment philosophy. And I find this to be very important because all of us have a different set of goals, risk tolerance, and even preference of strategy. Some of us might just want to buy indexes and take a more passive approach, and some of us might want to take a more active approach and buy individual shares. And of course, there's always those people that are in the middle. And here's where I suggest you use AI to assess your specific investment philosophy by asking you enough questions to where it can create your analysis. And that analysis is what I suggest you copy and paste onto this document. For example, if we go onto mine, we can see my primary objective is to compound capital at a rate that exceeds the S&P 500 or full market cycles. And this will, determine the metrics that I look into, the type of, strategy that I choose to follow, etc. And that's why I find this to be very important, because this is kind of like our foundation for everything else. And that's going to, show us what we look into. For example, just to give you a brief look at mine, what I invest in. I invest primarily in high quality businesses with durable competitive advantages, high or improving ROIC, or it's just return on invested capital, strong cash flow generation, rational capital allocation, and products or services that are mission critical, scarce, or emotionally valuable. And I prefer exceptional businesses, even if growth moderates over time, over low quality businesses that appear statistically cheap. And yeah, that's what I suggest you do. And let's move on to the first businesses. Now, the first company that went into this portfolio is Microsoft. Firstly, due to its very attractive valuation and its high competitive advantages, which I'll actually explain right now. And lastly, because it's a company that I understand. Now, this share price has actually fallen 22% from all-time highs, and this is mainly due to one reason. And look, I'm going to simplify it a little bit, but let me explain. Imagine what's going on is that Microsoft keeps investing into AI, and investors are wondering when this investment is going to pay off. For example, just think of it like this. Microsoft is investing $1 billion into AI data centers, and investors are wondering, okay, well, when are you going to recover those $1 billion, and when are you going to start making profit from that? And that is mainly the fear that is going on. And due to that uncertainty, the market has actually punished Microsoft's share price. However, I find it to be very irrational, as Microsoft's ROIC, or return on invested capital, is 27%. And that means that, for every $100 that, Microsoft invests, it will generate $27 in profit, from that investment. Now, the other fear is that it wants to, evenly distribute that investment into all of its segments. And let me explain this to you. Microsoft has mainly three segments. The first one being its productivity and business processes, which, as I explained, it includes softwares like Excel, Word, etc. Its second one being an intelligent cloud, which, think of it like this. Imagine that, businesses have to host their websites, applications, and, things like that on data centers or on servers. And basically what Microsoft does, they host this computing power through its intelligent cloud segment. And the last one is other personal computing, which is, stuff like Xbox and things like that. But the main problem is that, Microsoft wants to evenly distribute, AI investment into all of them, when the market just prefers it to be done into its intelligent cloud segment, as it's the one that, provides the most profit. However, I find that again to be very irrational due to the fact that, well, it's going to create long-term value in the future, which is what I personally look for as a long-term investor. And if we look into Ticker, a tool that I highly suggest you look into if you're going to take investing seriously, here we can see the ROIC of 27%. But however, if we come to their financials, which is what I wanted to show you, and we go into their total revenues, however, let me just go back a little bit. Oh, and I've also calculated the average sales growth from 2017 to 2025, and that's actually a 13.4%. So, I mean, that is, pretty much a good growth, especially for a company that is that big. Now, if we look at the line chart, we come over here, we can see how their sales, like visually, their sales just keep increasing. And that's why I'm saying that this company, visually we can see how its sales just keep going up and up and up. We see how its average has been 13.4%, and that's very impressive for a company of this size. And if we go onto its EPS, or earnings per share, it's this one. Yes. Okay. Diluted earnings per share. And we just, take out the visibility for this one. We can also see here how its earnings per share have, kept increasing. And that's why I'm telling you that this company provides a lot of value for its shareholders. That's why I tell you, it has high moats. It's a business that we can understand. And as for its valuation, I'm going to run a simple model here, which I don't think I've showed you on, because I have a more advanced model. However, I cannot show you that for various reasons. And I'm just going to, use this simple valuation method through Ticker. And I'm actually being punishing Microsoft because the consensus, which is the expectations of its sales growth, is actually 15.8. And say I even put 13%, which I don't think that would be the case, but 13.5%. Their operating margins, say I punish it because it's 46, the consensus, the expectation, but I point 42.5. And I think the PE ratio is going to go to 30. Now, before I run this, let me just, quickly generate it. But let's just say, let's go to their valuation, which you can also look into, and go into their PE ratio here. If we look at it and we go into their 5-year, actually 3-year maybe, the mean is 31 and currently the last is 25. So say this stock goes back to 30 because again, the market is being irrational, guys. And that's what we have to look into. So say this, recovers at 30, which I think it could, potentially. After the market finally realizes it's being a little irrational, we come over here to the model and put a 30, and then we click on the generate results. We're going to get a 18.3% per year. Now, if I go back and want to be more conservative as to the P ratio that I'm going to sell it at 28, it's still going to generate me a good result. And again, remember, the market is being irrational, guys. So what happens if the stock keeps falling? In my personal portfolio, remember, this is not financial advice, I'm going to keep buying. So the second company that was added to my portfolio is Constellation Software, since it has the most attractive valuation out of all the companies listed in my portfolio. And second of all, because it has a lot of competitive advantages. And well, lastly, again, because it's a business that I understand. Now, I know most of y'all haven't heard of this business, so let me just quickly show you a little bit about their business model. If we go onto their webpage, Constellation Software is a leading provider of software and service to a select group of public and private sectors. We acquire, manage, and build industry-specific software businesses. So basically what they do is, let me just come over here real quick. And here, what we have is, imagine what Constellation Software does is they buy very small software businesses that are super specialized and they're super niched. These are actually called vertical market softwares since they're so niched into something like super specialized into something like, for example, agri-food, bioscience, cultural collections management. And since they're so specialized into this, this creates a high competitive advantages, which it's actually called high switching costs. And I'll explain that right now, but just like look at everything that I have: softwares for hospitality, clubs and resorts, spa and fitness, construction, payments, automotive dealerships. I even heard that they have softwares for golf course management. The interesting part about this business is how they run a decentralized management style, meaning that every software they can kind of like administrate themselves the way that they want to, or they can implement things the way they want to. For example, say a hospitality software doesn't require AI, but something like agri-food does. The agri-food would probably implement it, and this one wouldn't have to. So they all choose the way that like what is most efficient for them. So this centralized management style is also going to create another competitive advantage, which, or not a competitive advantage, but it's kind of gonna debate. It's gonna go in debate with one of the fears of this stock. So we have a decentralized management style. We have super, specialized software companies, which creates high switching costs. So what is going on with the stock? Why has it fallen 52%? And just quickly for reference, I'm going to go to Constellation Softwares. I'm going to their valuation just so you can look at something at their PE ratio and look at what's happened. Literally gone down so much. It's at 17, closest to the all-time low of 16. Actually, we haven't seen these levels since 2016. That is bad, or that is not bad. That's actually good. That is good for us investors that are trying to buy things below their intrinsic values. Because if we look at their financials, I'm gonna really quickly explain some things, but don't worry. We see how they keep growing at double digits, and that's why I'm saying that this company and this is irrational. And let me explain why. So imagine the fear is this. Actually, the founder, which was the CEO, resigned. So the market, doesn't want to pay the same multiple, and that's totally understandable. But the PE ratio has fallen so much to a point where at some point it's going to have to recover, and I'll explain why. The reason why is because they run a decentralized management style, meaning that even if there was a change of CEO, every single company is going to be able to manage themselves in a way that best suits themselves. The other thing is about capital allocation, because I don't know if y'all know, but this company never performed any share buybacks, and it had a very interesting company culture. However, and this is going to be another thing that I'll show y'all for my system, if we analyze the transcript calls that the new CEO has made, he clearly shows that he wants to keep the same company culture, and he wants to keep allocating the capital the same way that the previous CEO did. So I find this to be very irrational, because maybe the market will not pay the same multiple, but it got to a point where it's been at all-time lows, which just shows that the market has overreacted. Another reason is due to AI fears, but again, I find this irrational because since it's a decentralized model, management style, every company will figure out if AI makes them more efficient on it, and if it does, they're going to start implementing it. Last but not least, it's also because it has high switching costs, and it's not that easy just to move when you have your whole workflows integrated into Constellation Software to just go from that to an AI tool. So yeah, I think it has a lot of competitive advantages. I think it has a very, very attractive valuation right now, and overall it has high competitive moats. Now I'm going to explain the second part of my system, which is basically creating general templates which get filled out for every individual company. And this is why I actually, suggest that you create a folder within Google Drive, because from here, based off of your specific investment philosophy, you're going to be able to find the specific templates that best suit your needs. For example, me, that I wanted to understand, the business and the various segments, I actually created a template, a general template that kind of creates a thesis. Let me just come over here really quickly. And I specifically prompted AI with a lot of things that I wanted to look into. But for example, here, company name, ticker, sector, and these things are the type of things that I will fill up based off of my research. And I will also, ask AI to help me in certain things that I do not understand. Here I also have my valuation template, which I cannot show for various reasons. However, you get to see how I'm creating templates based off of my specific strategy. I also have one here for KPIs, which I'm actually still working on because I find this to be very important since every business has its own type of KPIs. And these are general templates, which, as you can see here, get filled out for every company, which is actually why I have my last folder, which is, company research. Here is where I actually analyze every individual company. Like, for example, let's say Constellation Softwares, and I actually create, a, a folder and a document for the specific thesis of Constellation Softwares, its valuation, and the other part, which I suggest you look into, is transcript calls, because with transcript calls, you're going to see, the evolution of the business, future plannings, and things like that. For example, one of the biggest fears with the resignation of the CEO is the company culture was going to change, and they were gonna now start implementing buybacks and stuff like that. But if we actually go into their most recent call, and we come over here, we're going to see how. Let me just really quickly. It's kind of. Oh yeah, here. No, we're not considering buying back shares. The new CEO, and I don't think there's anything you can extrapolate into that other than both John. But basically, instead of having to read all of this, you can ask AI to analyze them, and it's going to create very specific like analysis based off of course, what you prompt it. I usually like to prompt a lot of stuff into AI based off of my current knowledge and, again, my investment philosophy. But if I come over here and go into the CSU calls, I can actually look at the most recent one, which is net impact of thesis neutral, slightly positive. This call shows high cultural continuity, no early strategic drift, no capital discipline erosion, and no narrative inflation. Obviously, this is something that you have to read through. It's not just a copy pasting. So of course, please make sure to do this. Again, this will be very crucial as it will provide you with a lot of information, and it will kind of like actually influence your decisions a lot, because maybe a business is doing very good right now, but if its management team is just not performing as well as they used to, or it's a new management team that doesn't have a good performance, obviously that's where you have red flags, and your decisions change. Now, the fifth company which I selected into the portfolio is Amazon, and this is actually for the same reasons. From all-time highs, the share price has fallen around 7%, and this is due to fears with increasing capital expenditures in AI, kind of the same reason as Microsoft, and due to fears in its cloud computing segment. However, I believe that Amazon has a lot of competitive advantages, and looking at the retail segment, it actually has cost advantage since Amazon has invested heavily into their logistics. On top of this, their AWS provides a lot of growth for them, and I would also consider AWS to have high switching costs for most clients. Now, the last two companies which I added to my stock portfolio are Meta Platforms and Taiwan Semiconductors. And looking at Meta Platforms, its share price has fallen 9%, and this is due to the same reason of rising concerns of increasing capex. Because of course investors have uncertainty as to when these investments are going to pay off. And I find this to be a very similar case to Microsoft, because if we go to ticker and look at the ROIC, they actually have a return on invested capital of 27%. And while the market might be scared of them deploying capital, I actually want them to deploy more capital, because think about it like this. What is the use case of a high ROIC if you don't even have a high reinvestment rate? Maybe you have a ROIC of 90%, but you can barely even reinvest into your business for whatever reason, and you have a reinvestment rate of 1%. Then that's a problem right there. However, here we see a good ROIC and a high reinvestment rate, and this is happening while the market is actually punishing the share price. So I find this to be a very good opportunity to invest. Of course, this is based off my personal criteria, and this is what I'm going to be following myself. This is not financial advice. But yeah, I suggest that you add the stock to your watch list and look for potential updates. Again, this is where also transfer calls come in handy, because you can analyze what's going on and stuff like that, and you can actually prompt AI to analyze a specific part of the call. Now, the last company which I actually selected into this portfolio is Taiwan Semiconductors. And I'm going to tell you something right now. It's not because of its attractive valuation, but rather its high competitive advantages. And this is what's really carrying the company in my point of view, because think about it like this. Taiwan Semiconductor basically has a monopoly on, the most advanced, chips. And the thing is that it's not very easy to replicate these chips. It's not even a matter of money. It's kind of like a matter of time, research, etc. And this company basically has a monopoly on the advanced chips, and they supply big companies like Apple, Nvidia, and stuff like that. And think about it, when you see companies that are like, Nvidia, that are biggest companies in the world, they're actually at the end of the day just designer chips. The ones that are doing the hard work and actually making these are Taiwan Semiconductor. And I don't think that's going to change anytime soon, because I find it very hard for someone to be able to replicate this technology soon. And keep in mind that Taiwan Semiconductor has a head start against all of these other companies by a lot of years. So I obviously don't believe that this company is undervalued, but I do believe that it has high competitive advantages. And as demand increases for chips, so will this company. Its share price will increase. So it's pretty much a summary of my 2026 stock portfolio. I hope you enjoyed today's video, and if you did, please make sure to like and subscribe. Also, if you have any comment or questions about my system, please make sure to also comment them down below. I'll be very glad to respond to any questions. I'm actually still working on improving this system. I'm actually thinking of developing an app, and kind of like, I don't know, I have a lot of ideas for this, but they're all gonna come in the future. So yeah, I hope you enjoyed today's video, and if you did, please make sure to like and subscribe, and have a wonderful day.